Have you ever wondered what it is that the great traders do that you don't? They are all great losers. But why is losing so important? And how do you go from this to this? Well, let's dive into the numbers. Picture this. You invest $10,000 in a stock, and unfortunately, it takes a nosedive, resulting in a 50% loss. Now you're left with only $5,000. But here's the kicker. To recoup that $5,000 loss, you don't just need a 50% gain, you need a whopping 100% gain. That's double your initial investment. Imagine this scenario. You make an incredible 300% gain on a single stock. Your $10,000 investment is now a hefty $40,000. But what if before that you suffered two 50% losses? Suddenly that 300% gain only brings you back to square one, $10,000. So what's the secret sauce to success in the stock market? It's all about managing your losses. By keeping your losses small, you pave the way for those big winners to truly shine. The key is finding that sweet spot between your win rate and risk-reward ratio. You could lose 9 out of 10 trades, but as long as your losses are capped at 1% and you hit one trade with a 9% gain, you're still in the green. And it's not just me saying it. Here are some examples from the very best traders in history who emphasize the importance of being careful with losses. Nicholas Darvas, known for his book How I Made $2 Million in the Stock Market, said, "If my stop losses hadn't taken me out of the market, I could have lost about 50% of my investment," in which his approach to loss management kept him out of the 1957 bear market. Tudor Jones, one of the most successful hedge fund managers, is another great example. He's known for his rule of never risking more than 1% of his capital on any single trade. Don't focus on making money, focus on protecting what you have. Jesse Livermore, often regarded as one of the greatest traders of all time, also emphasized the importance of cutting losses quickly. In his book he said, "I did precisely the wrong thing. The cotton showed me a loss and I kept it. The wheat showed me a profit and I sold it out. Of all the speculative blunders, there are few greater than trying to average a losing game." At the end of the day, how you lose is what sets you up for when you win. The smaller you can keep your losses, the better you set yourself up for when you do succeed. You need skin in the game if you want to play the game.